Welcome to the Life Success and Legacy Podcast. We're glad you're here, and we hope you enjoy the episode.
Hey, welcome back to the next episode with the Life Success Legacy Podcast. I'm Chris Bay, joined by Michael Crawford. How are you, sir?
I'm doing well, and yourself?
I'm doing very well. It's good to see you.
Yeah, same.
We're in different states right now. Usually we are probably within a mile or two of each other.
Pretty much.
But a little different. My wife and I are out in Buena Vista, Colorado in an Airbnb, and it's beautiful out here. It's probably about 78 degrees and 13% humidity. So if you see a fly cruising around here, it's because we've got the windows and the doors open and all, and enjoying it. So
yeah, absolutely.
Yeah. Well, Michael Crawford, the last podcast you were on this, and we're flipping it around a little bit. You were interviewing Mike Kwong.
Yeah.
And actually, it's been interesting because we've got quite a few reach outs from people after that specific interview.
Some of the things... I knew it was an important interview. His impact on the team recently has been pretty intense, in a good way. And he and his wife both are so well connected within certain groups and different agencies that we affiliate with that getting that interview done, I think, was a really important thing to do.
Yeah. He's busy teaching. In fact, I'll drop a little plug here because I know there's quite a few people that we've met with that are waiting for this, and that is his new book that we hope is going to be published by the end of this month.
Yep.
By the end of September.
Yep.
Called Dibs on Your Money. And it's really a fascinating book that really walks people through their learning experience and how they've kind of cobbled together these different concepts to create what they've created.
Yeah. And
people are very interested in learning about what they've done, me included.
Well, his real world experience is a little different than most of ours, right? From a team perspective, he didn't come from a pure teaching background, but he is a teacher. He didn't come from a pure investment background, but he's owned real estate and been in the markets heavily and invested in a lot of different types of things, and he's a financially minded person without being a financial person, if that makes sense.
Absolutely. And Mike's the one who's officially on the team, but let's not forget what he calls the secret weapon, and that is pay. Right?
I know, exactly.
She is amazing. She is bright, creative, an excellent teacher in her own right.
And an excellent communicator.
Yeah, absolutely. So you mentioned Mike and how he brings a different element to the team, Life Success Legacy team. And we are intentional about that. All of us have our different strengths, which can be a little dangerous because if you pull one of us away, there's no one that automatically fills that role. We very much focus on our unique abilities and things. And what I'd love to do today with you is kind of give people an update. I think we probably did an interview maybe about 4 years ago.
Yep.
Milo would have been what, like
3?
3? Okay, 3 at the time. And so I'd love to do is kind of an update on MC3. We'll explain what that is. And just talk about your role within Life Success and Legacy, your family and your IBC system, and then kind of your experience as these things have gone. And specifically, I'd like to touch on policy design.
Yep.
So we will get away from a little bit of touchy-feely stuff.
Technical
pieces too. But you did something kind of unique with your parents' policies that I'd like to touch on as well. So
absolutely.
I think the listeners are going to really enjoy this. We are going to touch on a variety of things in talking with Michael. So first of all, you were talking about the uniqueness of what Mike Kwong brings to the team, but you yourself bring a really unique set of skills to Life Success Legacy, which nobody else on the team can replicate.
Right.
So from your perspective, give our listeners kind of a view as to what you see your value and what you bring to the team. And there's a lot of different things in that basket.
Yeah. When we talked about our unique abilities, and I kind of put Mike Kwong on the spot during the last interview, talking to him about his unique abilities, sometimes I have a hard time honing in on mine, to be honest, because I feel like I have a lot of vastly different abilities, maybe not all expertise, but different abilities. And my biggest ability, I think, is just I understand how to bring complicated things into the fold. And I love to research. I'm an investigator on different things. If there's a topic that we need to find out how to unravel, I'm usually the first to raise my hand, I think. I
You're a
have the
problem
patience
solver
for
for
it.
sure.
Yeah, problem solving is definitely my unique ability if you were to nutshell everything into one. One of the things that I love about working with the team at LSL is I get to combine a lot of things that I enjoy. Tech, which I love, teaching, which I actually do enjoy, because even though my background isn't that, when I was in the automotive field, I had to teach people, or at least communicate to people, complex ideas. Nobody cares about it. And I said this in the last podcast, and I'll repeat it, but nobody cares what the timing belt does. They just need to know that it's there and that it works. I had to try to explain to customers, hey, this is an important aspect of your vehicle, and bring it down to the you and me level, as Nelson would say. And so, I love to teach, and IBC is such a powerful tool. And we'll probably get to a little bit more about our family plan, but all the things that I get to do as what I deemed myself technical director. I thoroughly enjoy each and every aspect. Every day is a new adventure. I rarely work on the same thing on a day-to-day basis, maybe, piecemeal things, but, and then lastly, I've increased a lot of communications with clients lately, which has been really, really fun. As an additional teaching point outside of boot camps or webinars. And I've really enjoyed that as well.
Yeah. Yeah, you bring a lot of varied skills to the table. In fact, we've joked in the past, for those of you who are familiar with the old show Cheers, about the bar, where we would come, everybody knows your name. There was Cliffy on Cheers, who was the mail carrier, and the dude knew facts about everything. So there are times when we go, "Hey, Cliffy," to Crawford, like, because he just knows something about everything.
Yeah. I sometimes have a tendency to overshare. So yeah.
How's Mary, your wife, feel about that?
When I told her that you guys call me Cliff sometimes, she goes, "I'm not sure if that's an compliment or an insult." Because if those of you who do know the show, he was a bit of a goof, and maybe sort of made fun of a little bit on the show, but he was also a lovable character that really made the show pretty interesting.
Well, I think it applies to the fact that something about so many different topics, that from my perspective at least. So,
yeah. But to be honest with you, my wife always tells me to go talk to somebody else. She's not interested. So,
Well, bringing up Mary, let's transition just a little bit. MC3. Yeah. You guys kind of self-named your family MC3. Tell us what that means.
Yeah. Well, when Mary and I decided that we were going to have a child, like, the question came up immediately, because her name's Mary, my name's Michael. Her maiden name is Corcoran, so C, and my last name, our last name is Crawford. So obviously we were already MC2 to go into all of this. Having a child 7 years ago, the question was, would we name that child an M name? And for a very long time, we weren't going to do it. In fact, it wasn't until the day he was born, because he was 3.5 weeks early, we didn't have a name picked out. And the doctor, not intentionally putting us on the spot, but at that moment putting us on the spot, asked us if there was a name for Milo. And we were like, "Oh gosh, we have a few." And Mary blurted out, "He looks like a Milo." And I was like,
"Oh my gosh."
And it was on the list. It wasn't my favorite name. I want to be real honest. It's a crop, for those of you who don't know, also named sorghum. And it is a nasty, dusty, itchy. It's like getting insulation all over you with dust. It's awful. So I didn't want to name him that, because I hated it as a crop as a farm kid. Yeah. But it definitely has fit him. And so because of that, now we are MC3 or MC cubed. So
yes.
Yeah.
When you said that, when she said he looks like a Milo, it took me back because when we were working on names for Lily, and I was in a classroom teaching at the time, and we had just gotten the very first pictures of Lily, who both of our girls are adopted from China. And Sean came up to the window, and I told the students, I said, work on your own or talk amongst yourselves. And Sean's showing me the very first picture we've seen of Lily, her dossier picture. And we had, same thing, we had talked about a variety of names. And she holds up, she says, "Doesn't she look like a lily?"
Yeah.
Same quote. And I was like, of course she does. Yeah.
Yeah. I don't want to say it's a maternal instinct because I don't know how that works, but I'll tell you, when she said it, there was no denying she was right. There was no discussion. It was, yes, that is it.
That's it.
And he's definitely been a Milo.
Yeah. I wonder what the paternal instinct is. Maybe just to be an idiot.
That checks.
Probably so. Okay, so let's talk about MC3 and let's apply it to IBC. Give folks some context as to your IBC plan, your strategy, your system of policies, and kind of how you got started, how you've applied it, how you've grown in your knowledge, both you and Mary. Obviously, you do this for a living. Mary doesn't, just like Sean doesn't, but they're very much a part of what we do as a family system.
Yeah. So, 7 years ago, I got involved with Mike Everett. Chris was part of Mike, but not a team yet. So I knew Chris, but, outside of just meetings and hanging out, you weren't part of the direct team. So I dealt mostly with Everett to begin with. You and I had a lot of good chats, but he wrote my first policy, Mary and my first policies. And that was back in 2015. And we started with just two $5,000 policies, one on each of us. And fast forward 3 years, 2018 is when I think things finally clicked. Now, at that point, a lot had changed with the team. And I'll use that in air quotes because at that point, we were actually functioning as a team. It was Mike Everett, Chris Bay, Shelley Forbes, and myself at that moment. And Mary had gravitated towards Chris as a coach. And we tell our clients this all the time. You may jive with one or all five of us on the team. And we even have some ancillary agents or teammates that aren't part of the direct team, and think people like Jeff King, who you may gravitate towards as well. But she gravitated toward Chris because of the style of teaching that he was able to provide, that you were able to provide for her. And it was at that moment during a meeting that things sort of, we always say, IBC is caught, not taught. Yeah. She caught it. Yeah. And it flipped our IBC plans right side up. And I won't say we were upside down, but we just really weren't utilizing them to their full potential because she had been a little hesitant. And that's okay. That's just how this works. But that put us into overdrive. And, we've been able to pay off a bunch of stuff. 2019, we bought the house we currently live in because we had the capital to do it. We still
wonderful home. I mean, I think about Milo growing up in that house.
Yeah.
The yard and the pool and the space and the neighborhood, and it's just a fantastic family home.
It was a big, shift. We didn't think we'd move out of the neighborhood we were in, but after having Milo and really wanting him to be able to experience I'll say family-friendly neighborhood, and not that the other one wasn't, there just weren't a lot of kids. Excuse me. And so for us, it was an opportunity to kind of give him what you just said, that sort of childhood home that he will remember and that will play an integral role in him growing up for different varying reasons. We did buy our first policy on Milo, as Chris stated, when he was 3. So 4 years ago, we added that policy on him to get coverage, as well as to create that financial future for him, right? And for those of you who have listened to that podcast, it's years and years ago, but that podcast, I stated that he will probably never have to borrow from a bank in his life as we've continued to build this system. And that is still true because we've expanded this last year in 2021. Mary and I both expanded our policies. We bought 2 more $5,000 policies on each of us, and a couple of term policies to add just that extra underlying buffer. And some of that comes in just as a team. Our education level has gotten better, right? Whole life doesn't always, especially the way we design it, buy you as much death benefit as you probably need. And so the companies we work with allow us to buy what are called convertible terms. And for those of you who've listened to our podcast, this is all repeat, but in essence, it allows us to convert part or all of that term policy into IBC style whole life without having to undergo additional underwriting requirements, which is always a good thing, because you never know if or when you would become uninsurable. And
well,
so
we personally went through that when
exactly.
we were in our 30s and Sean was diagnosed with thyroid cancer. Had we had a convertible term, we could have converted it into an IBC policy whole life.
Mm-hmm.
But because we didn't have that convertible term in place, we had to go 10 years of her being cancer free.
Yeah.
So it's a great way to get additional death benefit and also that safety net.
Absolutely. And I think, again, just as a team, we have become so much more aware of the bigger picture. And I'm not saying we weren't in the beginning, but I think just as you evolve as an organization and our customer client bases have grown at the rate that they've grown, we've learned a lot. And I think that those applications apply to all of our clients, but we're able to really use them and, kind of represent them personally as a team. And we do all the same things we teach our clients. That's what I also love, is that there isn't a single one of us on our team that doesn't have either multiple policies and term policies that we have for convertible use, and so it's such a cool aspect. When we talk to our clients, we're not blowing them smoke. We're telling them, this is what we do.
This is what we do. Somebody asks us about like the 90-10 design. We're like, yeah, it's possible, but none of us design ours that way.
Nope. And here are the lists of reasons,
Right.
And so,
exactly.
In the 7 years that we've been, practicing, if you will, infinite banking, because it is a practice. You're never perfect or an expert at it. It's always an ongoing process. And, we've been able to pay off lots of outside debt, and, we've been able to turn the wind current and really just shift our financial picture from where we were 7 years ago going into having a child, because we bought our first policies when Milo was 2 weeks old, which is funny. But we bought those policies and we did not have a clue whether or not they would work, honestly. And we were in such a tight financial scenario and landscape at that moment that it was something just to get from year to year. And looking back, it's sort of comical now that, where we were to where we are, and the ease at which we talk about money in our family is way different than it used to be. I mean, every first of the month, I used to dread, and I'm not saying that for the camera, I'm saying that for real. It sucked, because it was stress. And don't get me wrong, there are still things that come up in life that stress you out financially, but I'll be honest with you, they hit me a lot less forcefully than they used to.
Yeah, we've experienced that as well. That stress. And when we started out with our policies, it was kind of a Hail Mary, it was like, I really hope this works.
Yeah.
Well,
you guys were a little older, not that we're that much younger than you, but I mean, you felt like, I think, and not to flip the script, but I think you guys were in a position where you had been doing something for so many years, 5, 6, 7 years, whatever it was, and you hadn't seen the fruits of those labors. And you were like, look, we either go big or we go home.
Right. I'm curious for you. I have a hunch on this, but as you were talking about changing the wind current on your debts, and you're talking about the stress in a marriage, and we all know that oftentimes finances jumps up to that number one position on friction points in a marriage. And that's one of the things that I love most about teaching IBC is watching people. And I'm thinking of a very specific couple that you probably know.
I know exactly who you're talking about.
They've moved to Florida.
Yes, they have.
Hi, guys. And they're like, our marriage is totally different now.
Unbelievable. Right? Yeah.
And I'm curious for you, is there a specific debt, a specific liability that, like, it may not have been the biggest number, but emotionally it was the biggest one that you were able to let go of?
Oh yeah, my business loan was it was it was a rub point when we got engaged. When she started really, when I pulled back the curtain on my finances at that time. I owned an automotive business, for those of you who don't know, and that loan was not the biggest thing in the world, but for a person in their late 20s, early 30s, it was huge. And by the time we were able to pay that off, which came in the third or fourth year of our system, it was massive. Not the dollar amount that we paid off, but the
disproportionately emotionally, it was.
And also wind current wise, I mean, it was a mortgage payment basically, a number wise monthly. And to be able to turn that into your wind current, whenever we look at that, whenever we design things in our software, we always kind of like balance out, okay, the balance of the debt versus the wind current amount, i.e. the monthly amount you're sending to another entity. We weigh those, right? Like sometimes it's better to push a debt that has a bigger number to the top because it has a higher monthly outgoing amount that we can turn quicker. So when that happened for us, I really feel like there was this immediate like nothing was perfect, but it was definitely on the right track at that point.
Yeah. I imagine that debt, and just in talking with you and Mary and knowing you guys, that was an albatross.
Oh yeah.
It was just chasing you guys around in your relationship.
And furthermore, it was actually a debt we owed to my parents, which, regardless of your relationship with your parents or your person's relationship with their in-laws, that is another rub point that even if it's a great relationship, which I feel like me and Mary have always had a good relationship with my family, it still was one of those situations where when we got rid of it, it was like there was like hitting a home run. I mean, we got all sorts of stuff off the table all at once.
Snipping those strings, right?
Yeah,
the strings that are attached.
Gosh, it's just one of those things you never want to owe. You never want to owe money to somebody for so long that it feels like you're never making traction. And on a business loan of the size it was, and all the time, the things that happened during the ownership of that business, yada yada, it was, you're right, it was a major thing.
Huge relief.
Yeah.
So you brought up your family, obviously, because the loan was with them, which we are very much in favor of. Family banking systems.
Yes.
In fact, I wrote a book about it, right?
Yes,
Family banking with purpose. And so we're very much in favor of that it can be a very beneficial thing. Right. However, you do want to be aware of those strings that can be attached. You want to teach it like treat it like a real bank loan. Yes. Documents, amortization, all those kinds of things.
Yes, and that was definitely something we had done. And I think that more than anything, to revert back to relationships between daughter-in-laws and mother and father-in-laws, I think Mary always had a different relationship with that money than I did, because when I took it, I wasn't married or engaged to her. And I had a goal. It was a long-term goal for me at that time to own this business. And so yeah, I think we had set it up right, but her coming in cold, so to speak, from the outside, years into it, after a recession, it was just rougher.
Yeah. So talking about your family, your parents didn't jump on board with IBC right away.
Right.
But they were watching and they were listening, and you would have conversations, and eventually they did actually start some policies.
Yep.
Give some context to our listeners about kind of what their goals were, and then how that played out into actually how you planned and designed their policies.
Yeah. So, IBC's caught, not taught. So it took them a while to kind of get their mind around it. They were in a weird financial situation at that point too. Single income, not a ton of outside debt, but just kind of a weird financial picture before they jumped on board. Some things changed. Inheritance occurred, and it opened up a few doors and avenues that I think shifted their mindset on how to manage money. And it immediately made them think of infinite banking, which was great. That my seed that I planted.
They were never spenders, right?
No. They were
never big spenders.
No, not at all. No. And so, in fact, if they spent money, and still even today, is more on other people than themselves.
Yeah.
But it was a slow burn, but you also got to remember, like, we talk to our clients and to other people who are potentially looking to be an agent within, or talk to people and teach people about infinite banking. That inner circle of people, your family and friends, are the last resort. You don't go to them because that's a short well. There's not enough of them to really sustain your agency, if you will. But
Right.
two, they are the people that, if you are an outside salesperson, which I've been my entire adult life, they're sort of like looking at you as, oh, what's the new thing you're into now?
Right.
And for a lot of people, there have been some hesitation on IBC because of all the negativity. It also goes against everything we all got taught, and but yeah, by the time 2020 had rolled around, mom and dad were like, look, we know we're woefully undercovered on life insurance. We don't necessarily need a lot, because still, to them, life insurance was to cover debts, and that's it. They didn't think of it as a potential asset, or as an asset, if you will, like we talk about. And so when they came to me to talk about it, there was not really a wind current. We couldn't even use our software, which made me sad. But we did design the policies a little bit different for my dad specifically. Part of the reason is, A, he's a male. B, he's 3 years older than my mom, which put him into his early 60s at that time. And so, when you think about, life insurance is never cheaper than it was yesterday.
Right.
His financial picture at that time, they didn't need the cash right now. They needed to look at the long-term 10-year picture. And we'd even talked about doing a 7-pay reduce paid up, which is another podcast. But like, we'd talked about all these different like ways to manipulate the life insurance policy to fit their financial picture. And, you'll hear throughout all of our podcasts, if you're a loyal listener, is we talk about the 40-60 split, 40 in the base, 60% in the paid up additions rider. And we actually flipped those numbers for my dad's policy. Mom's had actually worked out to be almost identical at the 40-60, so we left it alone. But for dad's, we had switched it to the 60-40, which put a little more in the base, i.e. a little more death benefit up front. But our goal was to get them to that 7 to 10 year period of paying full premiums, not dropping the paid up additions, actually running it out for full 7 years at the full premium amount, which was $12,000 on my dad and $10,000 on my mom. And then looking at reduced paid up on those policies, because they would be in their 70s, and
Right.
looking at a different use for that dollar, right? And so all that stuff that you can talk to us about if you really want to dive into it. But long and short of it is that we did design those policies different because of their financial picture.
Mm-hmm. Yeah, absolutely. And we've had other clients who have chosen to design theirs differently like that. Again, we've talked about this before. Typically, we do the 40-60 split because it's a nice balance between early access to cash value and thinking long term. It's a nice split between those two. Somewhere between, I know Mike Kwong likes the 50-50 splits, right? Depending on the situation. A lot of the people that he works with, that 50-50 makes a lot of sense for them. But in your case with your dad, that 60% in the base, 40% in the PUA, serve their goals.
Yeah,
right.
Absolutely.
And that's what it goes back to, is what are the goals and the needs of the client? And then we design the policy according to that, for sure.
Yeah.
Were there any examples of how they used their policies? Did they take loans and use them? Did they do any family banking or anything like that? Or did they just kind of capitalize?
Yeah, no, the funny thing is that they started those policies in early 2020, I think. Yeah, no, maybe it was 2019. I don't remember. Either way, they started them just a few years ago.
Yeah.
We have too many numbers in our head. But anyway, they started those policies, and they didn't really have an immediate use for them, again, which is just a matter of capitalization. We were looking at that 7 to 10 year window at a possible, okay, at this point in time, things in your life are going to change. You're going to, obviously potentially be working less. Dad had already retired, things of that nature. And so we were looking at that from a long-term goal perspective. Pay your premiums, run the course, make the money work for you down the road. They had talked about at that moment doing some family banking with my sisters or even potentially myself. And, you know, so they never really got a full chance to do a lot of that. And then unfortunately Dad did get sick at the end of 2021 and he passed away unexpectedly. And so, you know, you think back to when you bought those policies and you were kind of chuckling, and I was a little bit like, um, there's they're just going to run these out for 7 years and take their cash and go on vacations or do whatever they were going to do, and
Yeah.
so
Yeah.
for Dad to have gone the way everything worked out, like, you know it was under $200,000 death benefit. Again, you got to remember we designed policies for cash value, not death benefit, right? But also, he was in his early 60s when he bought that policy and passed away at 63. And so, there wasn't a lot of time for capitalization.
Right.
However, being in the position they were financially at that time, Mom didn't have to have that money, but you know what? She was able to take that money and she's dang near finished remodeling her entire house with it. And
With some help from her son.
me and my cousin actually has been the general contractor, but yes, you're right, I've gone down there quite a bit to help, partially because I'm good at it, partially because I enjoy it, and obviously because it's my mom. And so looking at how that all panned out, that wasn't what was hoped for,
No.
but we turned lemons into lemonade by using that dollar to that they had put towards those premiums in order to do something good for Mom that had not been done in a long time, and fulfill a little bit of a dream that she'd had for 15 years of remodeling that house. And, it was bittersweet, right? To kind of see some of that happen, but it also gave us a lot of encouragement that she felt financially stable enough to do that without it really impacting the rest of her, outlook. So,
Right.
yeah.
Right. Yeah. Well, and yeah, thank you for sharing that. I think we're a little over the year anniversary of your dad's passing, right?
December 4th.
December. Okay.
Yeah.
December 4th.
Mm-hmm.
And I think about stories you've told about your dad. I obviously knew your dad,
Yeah.
but stories you've told about your dad and how he was always helping other people, always. And then when you talk about your mom having the dream of 15 years of doing something to the house, it's because he was busy helping everybody else all the time, right?
Yeah. He was weird. He liked to mow a lot.
Yeah.
He had a mowing business that never made any money. It was just to mow whomever.
My father-in-law is like that.
Yeah.
He mows for a lot of people, and I don't think he gets paid ever.
Dad never wanted paid. He mowed for their church, which had they live in middle of South Central Kansas. It was like a 2-acre lot, so I mean, bigger than your average like in-town church. But he had 4.5 acres to mow. He mowed my grandma's lawn, which was 1.5 acres. He mowed the pastor who lived an hour away. He would drive out there once a month to mow that for him, or whatever. Like the neighbors didn't have a good mower to mow the ditch, so he mowed their ditches. Like, just, I mean, it was kind of weird, in terms of like, you look back at all the things he was doing for other people and you wonder how he had time to do anything else.
Right.
Not just work on the house, but let alone, just function in his day-to-day, life. And excuse me. So, it's just one of those, like, Mary and I talk about it pretty often, just all the different memories. Yeah. It's cool.
Yeah. So I'm curious if I was to ask Mary, what qualities of your dad does she see in you? Let's go with the positive ones.
Sure. Yeah.
Our spouses are good at pointing out the other ones too.
Yeah.
The positive qualities, do you think Mary would point out that you have taken on from your dad?
I think just really, like, I think hard work would be one thing, and that I'm really willing to tackle just about any project, whether it's house or work or life. And Dad was a learner. He wasn't necessarily like classically trained, I'll use that term comically. He almost dropped out of high school, did graduate. He went to college for a little bit, but then after he got married and had me and needed a full-time job, so he started working as a machinist for Boeing back in 1979 and worked there for 42 years and worked his way through the ranks as a machinist. But one of the things that Dad did that didn't dawn on us kids until after he had gone, I think, and I think we knew it. He never took a management position, and he could have made a lot more money doing that, but he chose the position he had because he got to work third shift, which he loved, which he was crazy. He loved third shift. But second of all, he never missed a single one of our events.
Same.
And as a parent, I only have one kid, but that's a lot of work, to do what makes you money throughout the day or night but he would sleep during the day, right? So it was still an occupational hazard, so to speak. But how did he show up to all of our events? He came to school and helped out when we were kids. Like, what did you guys call them? Like parents helping teachers or whatever it's called.
Aides.
I mean, he was there once a week for a long time when I was a kid, second, third grade. I remember it vividly. In fact, a friend, when he passed away, wrote me a letter. Where she said that she remembered. And it was cool. It was just cool to hear that.
Yeah.
So
it's interesting you talk about your dad making that choice to work nights so he could participate in his kids' activities. My dad was a truck driver for UPS his entire working career.
Yep.
And I remember my mom always saying be quiet during the day.
Yep.
Because he was sleeping.
Always.
And even to this day, I have a sense of walking through the house. I'm like, shh, let's not be too loud, right? Like it's ingrained in me. Don't wake anybody up.
Yep.
But he was at all of my sporting events.
Yep.
I can't think of, and even in college, when I played college soccer and ran track, they would come to those games too. And it was a real commitment.
Yeah. It's and I'm not alone. Obviously, your dad did that for you as well. But it was one of those things that you didn't think about as a kid. You were just like, oh yeah, dad'll be there, sure. Whatever.
We take it for granted.
Exactly. And now as a parent, watching my kid start sports at the age of 7 and getting involved in other activities, it's really kind of cool to be able to do that for him and go. And again, he won't, and I'm not saying he doesn't appreciate it, but he won't appreciate it, I don't think, until later in life. And that's okay. But it's just, you look back at these things as you get older, and you kind of, especially after losing a parent, you look and you reminisce about like, wow, there were so many little things that you sort of just glazed over. And kind of cool.
Good stuff. Thanks for going there, Mike Crawford. Appreciate it. One of the things that I greatly appreciate about you in your varied set of skills and qualities and traits is that, yes, you are a technical guy. We can throw math stuff at you. You're going to dive in and get after it, but you got a heart that's this big. And
Thanks,
that's
man.
the thing that I appreciate greatly about you. So, yeah. Anything about the MC3 group or anything else we've touched on that you want to add in before we wrap up?
I don't think so. I will say, as parents of a child who's 7 and trying to understand money, it's been an interesting. Mary has to constantly rein me in because I'm like, well, we need to do it this way. She goes, he's 7. He doesn't understand that, and I'm like, yeah, I get it. But, I think, it's been really interesting from my growing up. And we used to joke, Mike Everett used to say this at the beginning of every boot camp. He would always say, your parents did a really good job of raising you, but they did a bad job at 2 things. 1, sex, second, money. I can't help you with the first. I'll teach you about the second. And I remember it because I laughed at it every time, and I still laugh at it. And honestly, and I've talked to mom and dad, even back before he passed, like about that. Like, look, you guys didn't talk to us about money. You taught us how to balance a checkbook, and that's it. That was garbage.
Yeah.
And so,
and
like,
you don't even write checks anymore.
no, and like, and the thing is like, I've tried so hard to. I want to include Milo, but I don't have like a good foundation on how to talk to kids about that yet, you know. And it's just a trudging through, learning from what you and Sean did, and you know, not learning from what Mike Everett did sometimes, you know, and he'll joke about that too. But like, you know, just it's such an interesting thing. But that's kind of where I'm at. Like, you know, I think we've got a good handle on our policies and our strategy and what we want to do and our goals, what we want to accomplish. And now I just sort of want to take that to the next level and teach Milo to make sure that he's truly set up and understands how this works.
Yeah. Well, you saying that, I'm going to do a quick shout out to our friend up in Canada, Winnie Lau.
Yep.
She and her daughter, Madja, who's in her 20s, have written a book. And it's I don't think it's published quite yet.
I don't think so either, because it would be on our website.
And we're going to get it on our website. But I will tell you, I wrote a foreword for her and read the entire thing. And I will tell you, it made me, one, regret that my kids are now 24 and 21, right? I wish I could take them back and have done things differently around money. But it also inspired us to do some new things with our 21-year-old. And we've been experimenting, and it has been fantastic to watch her growth and her ownership of money and all those kinds of things. So we will probably have a future podcast with Winnie talking about that book once it's released. And I'm guessing here, maybe within the next month, we'll start digging into Mike Kwong's book, Dibs on Your Money. We've got some great resources for our listeners. If reading is your learning style, we've got some good things out there for you. So,
absolutely.
Well, Michael Crawford, thank you for taking time to jump on here. It's fun connecting with you and hearing the story and being a part of you and Mary's journey. So, I love getting to work with you on the team.
Yeah, man.
So, for our listeners, check us out at lifesuccesslegacy.com. We always give a plug. Please, if you don't have a Nelson Nash book, Becoming Your Own Banker, get yourself a hold of one of those. And then we've got lots of other learning styles as well. Whatever platform you're taking this in on, give us a thumbs up, give us a comment, download, do all those things that Michael Crawford can tell you about that I can't. Catch us next time on our next episode of the Life Success Legacy Podcast.
See ya.